Welcome to this Payments International webinar. I'm Dave Birch, Director of Innovation at Consult Hyperion, and I'm very flattered to have been invited by the guys at Payments International to bring together a couple of absolutely top panelists to discuss the Open API topic with me. Focusing on the future and where it might take us. Now, we're going to be live tweeting this webinar, my favorite medium, as you all know. So you can join the conversation by using the hashtag #PaymentsWebinar. And, you know, as long as your tweets meet basic legal requirements of taste and decency, we'll allow them onto the channel. And we might even use some of them as questions as we move ahead with the webinar. Why are we doing this? Well, in Europe, the transition to open banking is here, really. PSD2 in Europe, the Open Banking Working Group in the UK, are bringing API access to banking. And while we might have some interesting opinions about where this might be going, nobody's entirely sure what's going to happen when Money Supermarket, Carrefour, and Facebook can have direct access to your bank account. And more to the point, there's nothing the bank can do to stop it. So when you get the email in a year or so's time, which says, hello, this is Amazon, can we have access to your bank account, just to sort of speed things up and make things a bit easier, you'll click OK, and there's nothing the bank can do about it. They have to let them have access. Now, we do understand that if we're going to give third parties, what you'll continuously hear referred to as TPPs, access to bank accounts, there's going to be a new spectrum of financial services. What that means, what third parties, what services, what conditions, and interestingly, I think, what new competitors, is the kind of thing that we're going to discuss this morning to help banks, fintechs, retailers, and all the others who should be interested in this bring together some practical perspectives and at least open up the key issues. I don't imagine we'll solve them all this morning. I'm joined on the line today by, who is it again? No, I remember, of course, Gijs Boudewijn from the Dutch Payment Association and Louise Beaumont from the Open Banking Working Group in the UK. And I particularly wanted these guys on the line because I think it's important to understand not only how the big picture is evolving because of PSD2 across Europe, but it's also interesting to look at what's going on in the UK and explore the relationship between the two. Now, before I get the guys involved, I just want to remind you, there's going to be an interactive Q&A after the discussion with both of them. So if you've got any questions, you can send them on Twitter, which is the way I prefer it, or you can use the Ask a Question button at the bottom of the screen. And I imagine that the questions will show up here somewhere where I can see them. I don't know exactly. It'll probably sort of happen. Oh, yeah, Q&A in the bottom of the screen. OK, I've got it. It's the little button that has the exclamation mark on it. I think somebody must have been swearing or something earlier on. We'll see if we can clear that and get it going again. Right, so let's start. Before we start ploughing into the details of open APIs and what they might mean, I think we do need a little bit of context. My good friend Gijs Boudewijn has a very clear way of thinking about these things. So, Gijs, could I ask you just to give the audience that backdrop to what's going on in Europe, and what the kind of components and timescales of this crazy PSD2 thing might be? Hello?
I can try to do that.
There?
Thank you, Dave.
Oh, right. Sorry.
I'm still there, yeah.
You've gone.
No.
Okay, so
I'm still on mute.
Can you give these people some big picture?
Yeah, I'll try to do that. Well, as Dave said, PSD2 is, of course, the revised PSD1, just PSD. The PSD2 needs to be transposed into national legislation of each member state by January 13th, 2018. Even in the UK, I understand that the plan to transpose it fully is still on, even with Brexit upcoming. Wow. So what I like to think of it is this is the level 1 text, i.e. the European directive to be transposed into national legislation. And basically, we think PSD2 is a game changer because it introduces the concept of access of third parties to the payment account for providers to be third parties to provide payments initiation services and account information services. And whereas PSD2 itself answers the what question, yes, there shall be access to the account, it doesn't really say how this should be done in a technical and a secure and a responsible way. Because I
thought it was something to do with APIs.
Sorry? That's level, I'm just level 2. I'm drilling down to level 4.
Oh, okay.
So the how question has been delegated to the European Banking Authority, which has received 11 mandates under PSD2, and the most important being a mandate to draw up regulatory technical standards on secure customer authentication and secure communication. The EBA has very broadly consulted, has published a discussion paper on this issue, and published its final draft standards on the 23rd of February, which leaves the European Commission, because that's the way it works in Brussels, has 3 months, i.e. to the 23rd of this month, to react to the proposal of the EBA, European Banking Authority. So basically, the concept of strong customer authentication was laid down in the directive itself. The EBA, under pressure of market participants based on the consultation, have opened up the door a little bit, have formulated a couple of exemptions, in which cases no strong customer authentication is required.
What are these
regulatory technical standards? The exemptions are, for instance, for contactless payments, remote payments under 30 euros, and issuers can perform what is called transaction risk analyses for amounts. There are 3 thresholds: up to 100 euros, up to 250 euros, and up to 500 euros. Basically, it says you can do transaction risk analysis based on data analytics. If you have established this is a low-risk transaction based on the channel use, on the amount, there's a couple of other requirements there. And then up to 500 euros, you can do.
That stuff we read before about contactless payments being made illegal, that's not happening now.
Yeah, right. So the Commission is still working on that, the latest news is, because this is probably one of the 2 changes they will propose to the RTS, the EBA have proposed to them. But again, these RTSs are not regulatory, and they're not technical, and they are not standards. They are sort of requirements based on which the market participants, and then we come to level 3, are supposed, or at least trying to avoid too much fragmentation, to a way of self-regulation within what is called the Euro Retail Payments Board, under the chairmanship of the European Central Bank, is trying to avoid too much fragmentation, as we have seen under SEPA. So we will not have 5,000 dedicated interfaces, because that's what the RTS says. A bank shall have a dedicated interface to allow third parties to access the account. Well, we don't want 5,000 dedicated interfaces, maybe not one, but at least a handful probably. So there are a lot of coalitions working, the most notable one being, well, of course, the open banking in the UK, but also the French, through STET, have made an API proposal, and there's what is called the next gen PSD2, part of what is the former Berlin group that is trying to do some harmonization work. But even that will that level 3 work is not going to provide the real APIs themselves. So then you get to a level 4 that, based on PSD2 on level 1, based on the regulatory technical standards level 2, based on one of these harmonization efforts in level 3, at level 4, each account servicing payment service provider still needs to develop and implement its own API. And this is, of course, a difficult game, because the law will kick into effect on January 13, specifying the requirements of access, but the market doesn't yet fully know what the requirements are, because these regulatory technical standards are not done and dusted yet, and are not expected before October. So there will be a lot of confusion still. What is to be done by the 13th of January 2018, how it should be done. Some banks will have a dedicated interface, i.e. APIs ready, compliant with the RTS, some don't, and a lot of discussion is still going on. What is the legal situation for ASPSPs that do not have a RTS compliant API in place on January 13 coming? Can they keep the door shut to third parties, or should?
Am I understanding this right? So the APIs currently don't exist. They're unlikely to be specified even in outline by October. And then when do the banks have to implement them?
Well, that's one of the questions, because legally, and there's a lot of confusion on that one too in Europe, the law says the regulatory technical standards, in legal terms, they will enter into force 20 days after publication in the official journal of the EU. But PSD2 also says that banks will have 18 months to implement them. I.e., let's say if they are being finalized, published in October, we will be in April 2019, by which date all member states have to ensure that all their ASPSPs in their territory have a compliant dedicated interface. So there is still an 18-month period of a certain degree of uncertainty, and there's a lot of debate going on in Brussels on what the situation is during these 18 months.
Okay, so the European picture right now then is that we have some unspecified APIs that are going to be used to deliver some unspecified services in an unspecified way through some unspecified set of mechanisms, because you haven't mentioned here, I mean, I don't want to be critical, but when Amazon asks me if they can access my bank account, how does Amazon know it's me? How do I know it's Amazon? How does Amazon know it's the bank? How does the bank know that it's Amazon? And how does the bank know that I told Amazon it was okay for them to access to my bank account?
Well, all this, let's say, handshaking has to be taken care of through the API. Of course, there are legal requirements. First, Amazon needs to identify itself unequivocally to the account servicing PSP. It needs to demonstrate it has a license to operate as a payment service provider, a payment initiation service provider. It needs to prove that it has your consent, and so on. And it has to comply with the strong customer authentication if it's not using an exemption. So all these requirements need to be taken care of through this dedicated interface.
Okay, so all right, so I get the general sort of big picture now, but a lot of this stuff remains unspecified. So before we move the conversation on to talk about what it might mean, let's get a UK perspective, because in the UK, this opening up of banking has come from a slightly different direction, and maybe we can use some of the lessons learned there to inform some of the European discussion. So, Louise, can you just explain to people what are the drivers for the UK's specific open banking initiative?
Hello, everybody. Louise Beaumont. I would say that there are four main drivers behind open banking, the drive for open banking here in the UK. Regulation is definitely one of them. So if you're asking me what regulators want, what they want is more competition and provision of financial services here in the UK. They want greater diversity of supply, they want more innovation, and they want inclusion of the underbanked. And really what they're aiming at, the kind of regulator fantasy, their dream is that we have a broader, deeper, more resilient, more pervasive and more inclusive financial services sector. So they don't want much. And they're aiming to achieve it through this measure, which comes through HM Treasury and the Competition and Markets Authority. But what I would say is that's one of four drivers. I think people's expectations have never been higher and have never grown more exponentially. And it's innovations by technology companies, by retailers, has driven those consumer expectations. So you and I expect to be able to do whatever it is we want to do, anywhere we happen to be at any time. We expect companies to anticipate our needs, and we expect them to deliver on them immediately. And we expect to be treated as individuals, so everything personalized around us. And those expectations are created in pretty much every other part of our lives. And, financial services needs to kind of catch up. And it's driven and underpinned by interesting technologies. And, we could have separate sessions on what cognitive technology really means in this space. But whether you take it to mean machine learning or whether you take it to mean all the way up through to artificial intelligence, it's underpinning the ability to be able to drive consumer expectations ever higher. And I think the fourth driver of change in this space is competition. And I don't just mean the competition we all kind of know and love in the banking area, Royal Bank of Scotland feeling that their competition is Lloyds or Barclays or Santander, for example. I think we've got three new types of competitors in and coming into the marketplace. So people will talk to you about fintech firms, for example, and yeah, absolutely, they are relevant to this space. They'll also talk to you about the tech titans, whether that means Amazon or Facebook or PayPal, who are open at their very heart and lobbying very hard on open APIs, and for whom this is a core strategic focus. But I don't think we should ignore what I would describe as the data players, those people who have enormous amounts of data and are looking to add to that data and to enrich that data with consumer and small business banking information. Just think about the services that they could provide with access to that data. So I'd say that's those are the drivers behind what we're seeing here in the UK with the Open Banking Standard. But I would broaden that out across Europe, obviously with PSD2. But there are banks in the US, and there are certainly tech titans and data players in the US who are recognizing the value of open APIs for their customers and are seeing it as a growth strategy.
Can I just ask you quickly about that, Louise, because this to me seems to be a very interesting part of the discussion, because banks are, as you've pointed out, banks understand how to compete against other banks. I mean, in certain areas, they may even know how to compete against, retailers or private label cards or, monoline mortgage specialists or whatever. They understand this kind of competition. But I genuinely don't see how banks are going to, in the space of a few months, learn how to compete with Amazon and Microsoft and Facebook and Google. To me, this seems quite scary from a bank point of view. Am I being overly nervous about this?
No, I think you've kind of got it, because if you think if those are the drivers that we just discussed, then what are the main impacts on a bank? You're absolutely right. It's going to impact customer experience, the things for which Apple and Amazon are famed and which they put at the very heart and the very core of their being. But for a bank, it also massively impacts their technology. But take it further, and it impacts their commercial model and it impacts their operating model. So you could take, there's a number of responses, a number of options for banks about how they could respond to this. One is to do nothing other than be compliant, so minimum viable compliance. So, I'm going to comply with the regulations, but I'm going to do nothing more. The next level is to kind of think of yourself as repurposing. You're going to try to build open banking experiences, but you're going to do it on your existing platform. That's going to be really difficult. You could take it a little bit further and you could say, okay, I'm going to try and integrate. I'm going to build those new experiences on a new platform. So then you're into customer experience, you're into technology, and you're into changing your operating model. Take it even further, and you're saying, yep, I'm going to build a new business model with new experiences on a new platform. So you're hitting customer experience, technology, commercial, and operating changes. Those are those are significant changes. And you've got to make a decision about, and it's going to, you're not going to do that in the next couple of months. You are going to do that over a period of years. And the question is, are you going to, stagger from one, up that chain, from compliance to repurposing to integrating to kind of reimagining what you are as a bank? Or are you going to try and leapfrog it? There's no way to do this without significant conviction and purpose, as well as to be able to understand the scale and the complexity of what it is that you're trying to achieve. There is another option, which is to say, you know what, we're going to be the infrastructure bank. We are going to compete on our platform infrastructure alone. We are going to be, without competition, the best connector of financial services, the best APIs, the best technology, which means implementing a new commercial model and a new operating model.
Well, it means an operating model that's founded on operational efficiency and volume, isn't it? But that's not necessarily unattractive. It could be for some of the bigger players that actually is the right strategy. Not providing the end customer services themselves, right?
Yeah, I think there's two end states for me. One is to say we absolutely are going to provide those experiences, and we recognise that we have to create those consumer and small business experiences, and we've got to do it on new technology, adopting a new commercial model and a new operating model. And the other model is to say, no, we are going to be business to business. We are going to be the infrastructure bank. They are both
This is like ClearBank, right?
Yeah. Yeah.
Can I ask, there's a great question from Emmanuel on the question feed here, and which I'd like to ask both of you. And she says, given the complexity of TPPs complying with everything they have to comply to, using the APIs, and the stuff we're not mentioning here, of course, which clouds this picture, things to do with data protection and so on. Given all that, doesn't that mean that we're not going to see the new competition that we were expecting? Because it's only the big players like Google and Amazon and Facebook that will be able to do all of this stuff. So the Commission, in trying to create more competition, is actually creating a new oligopoly.
Can I? That's a very good analysis, and indeed, some in Brussels say that PSD2 is counterproductive. I mean, there were fintechs that did things pre-PSD2, which we are trying to regulate now, but instead of fostering innovation, it seems to stifle innovation to a certain extent. The reason being that financial services are not just something. It's about the consumer's money that needs to be well protected. So my personal opinion is that we will see fintech, and I think Louise described it very nicely, that by the end of the day, banks need to choose for a scenario, banking as a service, being a platform, whatever, but you need to do something. Doing nothing is not an option, because then you're dead, I would say. As an incumbent bank, not doing anything is not an option, so you need to choose. But the fintech are probably better positioned to cooperate with banks and help them become agile, nimble, and fulfill their strategies. And you could well imagine that the big platforms, be it from China or from the US, they're sitting on the fence. They're waiting for us on the continent to sort of iron out all the regulatory wrinkles in this homogeneous market. And once we've done that as incumbents, they will jump off the fence and say, well, I need the payments data too, so I'll just go into payment services, not because I'm interested in making payments, but because I want those data. And this is
well,
my
that's
personal view.
Yes, I agree. And I've certainly heard people talking about the situation in China where Alipay and WeChat dominate in the retail space. In fact, I read it in the FT the other day. So it isn't the loss of fees that bothers the banks; it's the loss of the data, because that means because then that has an impact on their risk models and so on. Louise, can I push you a bit further on what's happening in the UK? Because in the UK there are actually, well, I hear there are some APIs actually live and people are actually using them. So can you tell us what's actually been going on in the UK and give us an idea of the current status?
Well, there's an enormous exercise underway called the Open Bank Implementation Entity, the snappily titled Open Bank Implementation Entity. This is a huge endeavour reporting into the Competition and Markets Authority, which has an enormous number of working groups and steering groups, which are focused on trying to bring to conclusion the open banking standard. The APIs that have already gone live, my personal view is that this was an early exercise to get everybody working together and to understand how to go through the process of creating the open banking standard and to give everybody practice. So I kind of, that's the way I view it. It was bringing people together, it was helping them work together, and it was getting to the point where we could all turn in some homework and then get focused on the things that will start to deliver value. And it's, I think, entirely sensible to keep everybody's focus on the 13th of January, which is a date which the Open Banking Standard also has deliverables. But this process will continue on beyond that date, and I think we can be focused on that date for compliance, but we need to look beyond that in terms of driving value for the consumer, whether that's a retail consumer or whether that is a small business.
So the APIs that have been implemented in the UK, this is Barclays and Nationwide and Lloyds and people like that, right? So yeah, the APIs that they've already implemented. Sorry?
They're called the CMA9, Competition and Markets Authority. The 9 banks captured by this, yeah.
Okay, so what do those APIs, so the APIs they already have in place. And by the way, if anyone's interested enough to do this, you can go to GitHub and actually download the APIs for yourself. What do those APIs actually do?
If memory serves, it's the location of ATMs.
That's it?
I believe so. I have to say I didn't really focus on that one. As I say, it was a good one to practice on.
But just to go back to what, see, because the reason why I wanted you to talk about this isn't because I particularly care about those APIs, but because of what you were saying before about what we've learned from the process of bringing these. So what have we learned from the process that we can use to inform the larger European debate and perhaps help it to move along at all? Or are we such a special case it doesn't matter?
No, I think we learn human things about how you have to work through this, about how you have to bring everybody together, about how you have to be disciplined about it, and how you have to turn your homework in on time and hit the deadlines. It's the human stuff that we learned, and it's the human stuff which is valuable. We were practicing, in my view.
Right. Okay. So now we understand the picture. So in Europe as a whole, sometime around October, we should be pottering towards some sort of vague outline of APIs, and a few months after that, we'll have some actual APIs to play with. Meanwhile, in the UK, we'll have a bit of experience of playing around with several banks implementing a common API. That's useful information. I just want to ask Hedge a couple more practical questions about moving this forward. So the other stuff that we need to make that work, I can think of at least two things which we'll need, which I assume you guys are working on, but I don't know where they're coming from. So one is, if a third-party provider asks for access to the bank account, how does the bank know that they are, reputable people who can have access to my bank account and not some rapscallions or mountebanks, often of Eastern European origin?
Yeah.
Okay. First, an answer to the little remark on your last remark on the Open Banking UK API. One of the big differences, of course, is that there was a lot more, let's say, government pressure and more specification on the direction of one UK common API. There is no such thing as one common European API. That's a big difference. I think there was a lot more direction giving, guidance given from the regulators, the competent authorities and so on than we have on the continent. So that makes it more complicated, I think, on the continent. The other question, as I said, the TPP must, as the directive says, unequivocally identify itself towards the account servicing payment institution, i.e. it needs to prove a couple of things, that Dave is indeed Dave, that Dave has a license to operate from any competent authority on the continent, and that Dave has consent from the consumer to access the account. One of the things that's under investigation in this Euro Retail Payments Board, indeed the directory, the register, because how does the TPP prove it is a registered entity that has a license to operate? There's a subgroup on the Payments Initiation Working Group that works on this directory services issue, because the competent authorities are not going to provide the industry with an online real-time register of all licensed participants, and somehow the proof of license to operate has to be included in the certificate the TPP provides to the account servicing PSP, and how this should be done is also unclear, and also unclear is who in the market is going to provide these services. This is another complication.
Okay, but at least we've recognised that.
Does it answer your question?
Right? Well, that's one part of it. So we're going to need some kind of directory of the sort of TPPs that are allowed. And
Exactly.
I can see that it's not quite clear who's going to do that at the moment. But the other thing we're going to need, presumably, is some set of guidelines or best practice or something to help the third parties to get started on it, because we want lots of third parties in this environment, don't we? I mean, Louise, we want a rich, dynamic environment of people bringing new and innovative and competitive services into the space. So in order to encourage that, we need things that we don't normally have in the banking sector: sandboxes and test beds, and developer tools and hackathons and all this sort of thing, right?
Mm-hmm.
Yes, we do, but we need to do it and mean it. Hackathons, sandboxes, incubators, and all of these things can be done really, really well with absolute conviction, because banks recognize that it's critical to the CX of the future, the customer experience of the future, and they realize it's incredibly important to drive that innovation into their business through smart partnering. Or it can be done incredibly badly with utter cynicism as nothing more than a cynical PR exercise. And you need to do less of the cynical PR exercises, and you need to do more of the meaning it with conviction, because you understand it's important, critical to your customer experiences in the future, to your ability to drive innovation and be relevant, and to acquiring and implementing a viable commercial operating model in the future.
Okay. So for the last 10 minutes, I hope we've given people a picture of where we are at the moment. So for the last 10 minutes, I want to press each of you on where you think this might go. So if this all happens in 2 or 3 years' time, what kind of landscape might we be looking at? I don't want you to become fortune tellers, but Gijs, how do you see the European landscape in 2 or 3 years' time?
Whoa. Well, indeed, I'm not a fortune teller. And of course, things, they will move faster than you expect, but slower than you hope. That's what we typically say in banking. But this time around, with all the technological possibilities, changes probably coming a bit faster than before. One, and two, as you mentioned, the big players, the big tech, the big question mark is, of course, what they are going to do, and that might be a landslide in itself if they would enter the market. But banks, of course, are more broadly in terms of service than just payments. But we will typically see, I think, that there will be a few large players. I see that in my own country, in the Netherlands. Some banks are really anticipating on the opportunities of PSD2. And some even say that even if PSD2 wouldn't become the law, it already has had its effect in terms in the sense that it's a huge wake-up call to the incumbents that if you do nothing, you're a dinosaur and you will die. So you need to change. There will be, but on the other hand, as your colleague Chris Skinner says, the road to innovation is paved with dead unicorns. So not all the fintechs and not all the startups will survive. And we
don't listen to him. He doesn't know what a unicorn is. I keep telling him that unicorns don't exist, and he doesn't listen. Don't quote him. You know. Louise,
in terms of APIs. Sorry,
finish that point. I interrupted you.
Yeah, and APIs. Just to quote yourself, it's a bit of a religious thing. I mean, APIs seem to solve everything, like world hunger and so on. Something like the blockchain. Let's leave it at that.
Okay, Louise, let me push you in a slightly different direction. My assumption is that in 2 or 3 years' time, let's say I'm talking to you on Snapgram chat, whatever it is that fashionable people like us will be using, and I need to send you the £20 I owe you for drinks last night. I'll just do it in Snapgram chat, right? And they'll use the API to do the payment instruction through the instant payments network. And I will never come out of, you know, LinkedIn and Facebook and things like this. I'm never going to run some stupid bank application and have to log into it, right?
Well, you're making a massive assumption there, David, and that's that I would friend you on Snapgram chat. But let's make that assumption. Let's say we're friends in that digital world. Then
you know, I liked it better when they had the stalk button instead of the like button.
Yeah, absolutely. I would definitely put you down as a stalker, but you're absolutely right. It is if you look at the investments and the partnering activity that those tech titans have been making over the last 3 or so years, absolutely, people will point to the inroads they have made in doing interesting things in payments. What I would point to, in addition to that, is the real investments they have made around APIs. The data and the rails upon which it runs. If you own the rails upon which the future of the industry runs, you're in a strong position. But the other area where they've made significant investments has been in that conversational interface. And if that's where you spend your time, you want to be able to do the things that you want to do where you happen to be. And in the digital world, if that is Snapgram chat, that is where you are going to be paying me for the drinks you owe me. Yeah,
I agree with you.
Fully agree. Absolutely.
Okay, listen, guys, I think that's all we've got time for today, I'm afraid. But thank you very, very much for joining in such an open conversation. I think and I'm going to sit and answer a few more of the questions that are coming on the screen. I hope you'll stick around with me to help people out there a little bit. But thank you again for being so open and straight with us from your extremely well-informed perspectives. We're going to be discussing this topic in a lot more detail at Payments International on the 12th to 15th of September at the Hilton London Tower Bridge. I mean, not just the three of us. There's going to be a couple of hundred experts talking about all sorts of interesting things at absolutely the leading edge of payments. So please join us all there. And if you've got any feedback on today's webinar, which is a little bit of an experiment for us, but if you enjoyed it or you have recommendations for future webinars around Payments International themes, please do complete the short survey at the end of the webinar. It'll come up on your screen in a moment. Thank you so much for joining us. Have a great day. Bye, everybody.